What's up everyone, it's Kadi with MoneyVest. So in this video, wanted to go over one stock which I believe is going to be worth looking into in 2024. And this is a stock that on the next pullback, it is something that we may need to consider from a trading perspective and may actually end up having a very strong 2024 because the earnings expectations for this company are really high for 2024. In fact, it is so high that this company is expected to more than 5x their earnings this year, and that's the forecast. And we know that the one thing that Wall Street absolutely loves is earnings growth. It is year over year growth on earnings, right? Regardless of what's going on in the world, if a company can grow its earnings 20, 30, 40, 50%, 100%, then that stock tends to perform really well. We've done this analysis, we've looked at the data, and in fact, this stock is expected to blow up its earnings by over 500% into 2024. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, again, links to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the members only private videos. There is a 16% annual discount that's available for a few more days if you're interested in joining, and you will be able to get those alerts and find out exactly when and what I'm buying in the market. So again, link's going to be down below. We'd love to have you on board. So the stock that we're talking about today is going to be Merck and Company. That's ticker symbol MRK, and it's a global healthcare company that delivers innovative health solutions through its prescription medicines, including biologic therapies, vaccines, and animal health products. And this right here are going to be the areas of focus. So oncology, vaccines, infectious diseases, and cardiometabolic disorders as well. So these are some of the areas of focus for Merck, and 69,000 employees with over $13.5 billion in R&D investments in 2022, and a little bit over $1.85 billion of giving and charitable donations for the companies. Performed really well over the last 5 years against the S&P 500 and its peer group. And this right here is going to be the third quarter performance for the company. Fourth quarter numbers are going to be coming out very soon. That's going to be on Thursday, February 1st. And right now, as you'll notice that it is incredibly overbought. We'll come back to the technical analysis, and Merck right now trading at just over $118 a share and just over $300 billion in market cap with over 2.6% dividend yield. We'll come back to all of that in just a minute. Now, this right here is the third quarter non-GAAP EPS of $2.13 of about 15% growth on a year-over-year basis, with, of course, a third quarter worldwide sales of over $16 billion for the company, and that's about 7% increase year over year. And full year non-GAAP EPS range is what they're expecting between $1.33 and $1.38 for the company. So this right here, you'll notice, is 2023 full year non-GAAP EPS, and in 2024 their expected non-GAAP EPS is going to be well over $8 per share. So that is once again over a 500% growth expectations, and we're going to be back on track and compared to 2022. And that's going to result in a very substantial growth, not only on a year-over-year basis, but of course compared to 2022 numbers as well. And for the full year guidance for the revenue is going to be sitting at just under over $60 billion in revenue. So this right here is going to be their GAAP financial summaries. Operating income or operating expenses $5.8 billion, $16 billion of sales, and GAAP EPS of about $1.86 for the company, which again was a nice 55% increase on a year-over-year basis. Now, when it comes to capital allocation, trailing 12 months, we're looking at about $1 billion of share repurchases, $13 billion spent in business development, dividends paid of over $7.3 billion, $4 billion capex, and after-tax R&D investments of over $10 billion. This is order of priority. So you can see their share repurchases are the last and the least priority item for Merck. But of course, after-tax research and development is pretty big because the company definitely wants to keep innovating. Capex, those innovations are not going to come cheap. They do require a lot of capex, and dividends also is very important for shareholders because at the end of the day, it does pay a very consistent, solid dividend. So commitment to the dividend, 6% growth year over year, coming in 2023 ending at just under $3 per share, which is obviously why the dividend yield is very nice, solid at over 2.6%. Now, when it comes to the total addressable market for Merck, we're looking at a global pharmaceuticals market reaching $1.5 trillion by 2026. And Merck's pharmaceutical segments, oncology, vaccines, and other therapeutic areas. With oncology, Keytruda and blockbuster drug for cancer treatment, it is a significant contributor. And animal health, global animal healthcare market projected to reach $421 billion by 2026. And we're looking at other markets also to grow for the company. So we're roughly estimating $2.5 trillion in overall TAM for the company when it comes to the overall market, total addressable market. And again, non-GAAP EPS expectations, $1.33 to $1.38. We're looking at shares outstanding of 2.55 billion. Non-GAAP operating expenses, 39.8 to 40 billion. And revenues expected to increase 1 to 2% with non-GAAP gross margins of over 77%. I mean, this could very well be a software company with those types of margins. And this right here is the overall growth for the business. You'll notice that it has done incredibly well, growing from $44 billion in 2013 to just a little bit under $60 billion trailing 12-month basis. Operating income and gross profits also moving in the right direction from $28 billion to now over $43 billion. And operating income's gone from $9.2 billion to now sitting at $9.2 billion. So it hasn't really seen a lot of growth, but over the last trailing 12 months, it hasn't seen a lot of growth, but in the last 3 years, you'll notice it's gone from 7 billion to 13.8 to a little bit over 20.6. And 2023, we know that profitability is not going to be that much, but the idea here is not 2023, but 2024. And that's really where the analysis and why the bullishness or the optimism comes in. Shares outstanding have been going down from just under 3 billion to 2.55 billion shares. And we're looking at diluted shares outstanding, of course, going down, and EPS has been increasing from $1.47 all the way to $5.71 and $1.80 on a trailing 12-month basis. Again, 2023 profitability-wise is not going to be the best year, but this year, 2024, it's expected to reaccelerate back higher very, very well. Now, the balance sheet's not the best. I'll give them that. So this right here, a little bit over $8 billion of cash with just over $34 to $35 billion of total debt, and net debt sitting at $26 billion with current ratio at over 1, which is good. Quick ratio of a little bit under 1. That's not the best. And debt to free cash flow sitting at 11.5. So the balance sheet, I would say, is somewhat okay. Definitely needs a lot of improvement. I mean, I would prefer for the company to kind of prop up its balance sheet with more cash, and net debt to be almost zero or negative would be ideal. And current ratio is good. Quick ratio needs to be over 1. So kind of excluding for inventories, it needs to go back up. And debt to free cash flow, we want this number to be under 3. So there is room for improvement here. Now, when it comes to valuation, it is surprisingly trading at a very, very high expensive valuation. And that makes sense because trailing 12-month, the EPS is going to be a lot lower. And I'll go over some of the earnings expectations here. That's exactly why I think 2024 could be a very strong year for Merck. But at the same time, we want to understand where exactly to be buying this stock. What's the intrinsic value and what's the technical levels to pay attention to? Both of those things are very, very important. You can find the best company in the world, but if you don't understand exactly how to price the stock and where to buy it from an intrinsic value and a technical analysis standpoint, it's useless. I mean, you could have the best company, but if you end up overpaying, your rate of return is not going to be that high. Your profit potential is going to be lower. So it's really important for us to be patient, even with a great company, for allow it to come to us, let the prices come to us. So valuation is a little bit higher. Price to cash flow at 17 to 50, again, on a forward trailing basis. And we're looking at price to sales at a little bit over 5 for the company. And margins wise, I mean, it is a very, very well-run company with 74%. Gross profit margins, net margins at over 7%. We got return on common equity, capital, and assets, also pretty solid at 4, 7, 10%. And this right here, net income per employee, it has gone down from its 5-year average, I will say, $142,000 down to $67,000. So maybe the company is kind of losing a little bit of that efficiency, and that's something that we may need to look into further. But this right here is where the analysis, sort of the main thesis, comes in. You'll notice $1.38 is going to be that non-GAAP and that GAAP EPS. That's going to be a decline of about 81%. But look what happens in 2024. They're expected to recover to $8.45. That's a 511% increase, and that's going to bring that price earnings multiple down to 14, right? Considering where the price is trading right now at about $118 per share right now. So this is exactly what Wall Street looks for. They look for year-over-year growth. This is what Merck is going to offer this year at over 500% increase. And then, of course, 12%, 6%, 9% in the following years. It's going to reaccelerate back up in terms of that earnings. So what we are really witnessing in 2023 is this dip right here. And then what we're trying to plan out is this recovery into 2024, which is obviously going to see a very nice year-over-year increase in earnings growth of over 500%. And that's exactly what Wall Street loves to see, is earnings growth and these banger earnings, beats, and of course year-over-year increases. So if we plug in, let's just, I'm going to do both ways. I'm going to do, let's say, $1.38 times 2.55 billion. So $1.38, we're looking at $3.5 billion, or actually, is that right? Yeah, so $3.5 billion. Let me just come back to net income. Net income right now is sitting on a trailing 12-month basis, $4.6 billion. So let's just account for $4.5 billion in net income. And let's just assume for the growth rate for the company, which again, if you take a look at $38 to $981, if you come back to this, we're looking at $31 to $1165, or let's just do $1165 2028. We're looking at a growth rate of over 53%. So even if we apply, let's say, a modest 25% with a 30 times PE multiple, and a discount rate of, let's say, 9%, or actually 10%, because the company does pay out a dividend of 2.5%, margin of safety of 10%, share dilution 1%, we're looking at a fair value of $95, right? $95, and that is going to be 19, close to 20% away from its current share price. And kid you not, this is a very, very conservative estimate, considering that the growth rate is expected to be over 50% over the next 5 years, considering that the majority of that jumps coming from 2023 to 2024. That's exactly why I do like Merck, at 95, sub $100 levels. And this right here is going to be that sensitivity grid, which of course, depending on the different growth rates and depending on the different price earnings multiple, this is where we are going to be at 95, close to $100 per share for the company. And again, lots of consolidation sideways. So this right here is going to be that support at $100, which I believe is going to represent a very nice potential opportunity for Merck. Let me know in the comment section down below, what do you think? But this right here has been a very strong support for the company time and time again. As soon as it's come down to low 100s or even sub $100, it's bounced right back up. So this right here is going to be that level to watch for Merck. And since then, of course, we've seen a very nice 20% rally for the stock. It's very, very overbought right now, almost hitting a new all-time high, pretty much a new all-time high for this stock. So I would be very careful. Not saying that this is a buying opportunity right now. Absolutely not. I'm not even going to be touching this stock at the moment, considering how overbought it is. And of course, the risk reward is not that favorable. But like I said, a low 100s, sub $100 is when I will be looking into Merck once again, because of that significant increase in earnings year over year. And of course, a very nice strong support. And my fair value, based on very conservative estimates, sits right there. So there's a lot of things to like about Merck at low 100s. And of course, the dividend yield would be much higher at about $100 per share. I think it'll be a little bit closer to 3% once the stock does pull back, let's say 20% down to that $100 level or sub $100 level. So let me know your thoughts down in the comment section below. Hope you guys enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. And again, I want to hear your thoughts. So comment down below, what do you think about Merck and what your expectations are? Earnings are going to be released on Thursday, February 1st. So that again is going to be very, very important for the company. And as always, make sure that you drop a like, subscribe. Link to our Discord Patreon is going to be down below. There is a 16% annual discount available for a few more days with a couple more spots that are still open. Happy investing. I'll see you all in the next video.